Hi,
Hello.
everyone.
Hi. Hi, everyone. Well, shall I
So,
start or shall you?
so I guess I should start by um, asking you, Victoria, how are you?
I'm good. Thank you very
Good.
much. And I was really looking forward to this because, this informal conversation usually has more information than the set up, very strict and rigid interview format. So that's what I thought that maybe it could be a good opportunity to meet up, have a little chat about payments and banking and everything, mainly maybe on a weekly basis, and see who is joining us and who wants to hear a bit more about the industry gossips and ideas and approach. So I was really looking forward to this. And well, thank you very much for giving the opportunity and the platform to make this happen. And yeah, let's jump in. And I'm very curious about what are we going to talk about today.
Yeah, I mean, I like the idea because, we have this platform, so we want to, talk about money, payments.
That's right.
You know,
Everybody's interested in this.
just before we got on, I was looking at the news. I don't know if you've been paying attention to anything recent in the news that has come up, but I think there are a few things that I would love to talk about with you. But first, wait, let's start by introducing your book to the people who are not aware.
Sure.
Victoria has a ebook that is available right now for sale on Amazon, and it's called Moving Money: How Banks Think. If you're
That's
not
right.
familiar with it, get familiar, go check it out. And if you're interested in money, if you work in the payments industry, if you just want to learn more about how to manage your money, that this is a great book for you. Even if you're just starting out and you're kind of young and you want to figure out how to handle your own finances, this book is a great introduction to help you learn the words, the verbiage, what things mean, and what might be, important for you to learn as you become financially independent and want to take control of your finances.
Yeah, and thank you. Thank you very much for having these kind words. That's right. This is a book. I'm blurred, but maybe it shows well. So this is basically about moving money, and I teach people how banks think. And the reason why I wrote this book because I was asking the questions and I couldn't find the answers, and I did a lot of research and I made a lot of googling, and then I realized that money is moving based on different criterias and regulations and laws, which could be completely different country by country. So when you're entering the international trade or you're just sending money abroad, you will face these issues. And it seems like that no one really has the answer. And that's why I decided to write a book. And the whole point of the podcast as well is to go through all of these aspects in a format where we can really talk about it, right? Because there are a lot of interviews with me out there. I'm talking about the book, I'm talking about the problems and the payments and the banking, but I felt like that it was always somewhat restricted, so I could not have the opportunity to really get in the subject and just talk to a friend about what happened. We are just discussing what happened last week in the world and how does it relate to banking and payments, and you will see that everything is really related to banking and payments nowadays. And that's why we decided to do these series and have an uncapped time whereby we are just discussing everything and understand how money moves and how banks think. So this is what we are trying to do here at this podcast. And I would like to encourage everyone to write questions and stories and share the experience regarding any kind of subject, banking or payments or money movements or currency, because this is going to be that kind of channel when we are discussing everything. Very important. It is not an investment podcast. We are not going to tell you how to invest the money. To be honest with you, if I knew this, I wouldn't be, sitting here and talking to you. I would be cashing out by now already, sipping my margaritas over at the beach. So this is not about how to invest money and how to multiply your money. This is about how to move money, how to make sure that the recipient is going to get your funds, how to collect money from your clients. If you have a little business, it doesn't matter how small you are, you will face banks, and you need to understand what are the rules and regulations around banking to make the relevant decisions. So in a nutshell, that's what we are going to talk about today, and hopefully long years to come. And we are inviting everyone to join us in this journey and join in the conversation and ask all those questions.
Yeah, I hope so, because what you just described kind of makes sense. Because to give everyone a little bit of a background on me, I've been doing payments for like the past 8 years, and what Viktoria just described kind of sounds like what I was doing with like small business owners in the neighborhoods in New York City that I was canvassing like 8 or 10 years ago. And I would have to like explain to the business owner, not in an investment angle, but as a straightforward information, letting them know, how can you collect the money from your customer? What do you need? What are the steps you have to take? What are the requirements in terms of like your identification? There are a lot of people that want to open a business or a bank account, and they don't always have the right credentials or documentation or ID, things like that. So, that was a lot of what I did for 8 years. And I would have to educate a business owner and then help them set up what we now call a merchant account, or it's what we call a merchant account, and it attaches to their bank account. And my job as the sales guy was to educate them on the types of merchant accounts they could get, or the point of sale device that they could get, what worked for their store. Maybe they wanted it on the website as well, and to synchronize. So those were the conversations I was having to try to educate business owners about payments, what it meant, and how it affected their business. And most importantly to them, when would their money arrive? When a customer paid them.
I know, right? That it seems like that everybody is working with banks and taking payments, but no one seems to have a clue how actually that works, right? It's the same way when you're looking at your TV. I get it. It shows the picture, but how the picture gets together, and it's different, because even though that you're not really fixing your TV, you just buy it and enjoy it. With banking and payments, you can have a lot of ways to affect the movement of the money, right? So I think that's why it's very important that we talk about it, because there are so many podcasts out there of how to invest your money and what to do that, but no one really explains how to store your money, how to make the relevant payments. Obviously, every time that money moves, there is a risk, there is a fee involved. And once you have a business which is processing more than, I would say, $200,000-$300,000, it is the time to start asking those questions, because there is a risk and there is a fee which you need to consider. And we just talk about how to put things in perspective in a different way, right?
Exactly.
So tell me all those news that you read this week, because I've got some news as well from Europe. I just came back from Hungary. I was there last week, and I've got some news as well, which is very Europe focused. But let's start with you.
Well, okay. I want to hear it. But this morning I was looking at the prices of Bitcoin, which to me are always relevant. I am totally always interested in that. So it's like not yet, it's like hovering around like it's high, 69.5. Yeah. And this really hasn't changed, based on the fact that there was news about BRICS, because they have like a new major update on their payment system. I don't know if you were aware, but I was looking and reading into that so I could keep up with it.
Yeah. And it's super interesting because that's one thing that, you get into crypto and you start buying things. But what I expect a lot to come is those banking hurdles when you really want to cash out on your Bitcoin. Because it happened to me once. I had a client, and he was in Cyprus. He was an individual person, and he had different companies. He was a director and a shareholder in many. And he called me. He's an old client of mine. And one day he called me and he said that, yeah, Victoria, I know that you're in this blockchain and crypto and whatnot. So guess what I did? I got some Bitcoin, and the price went up, and I made like 500 euro profit or something stupid on that. And when I wanted to cash it out on my high street bank, imagine in Cyprus, which is a small island in the Mediterranean, the bank immediately started to panic. They froze his account. They almost closed the account. He had to give millions of different documents to the bank to prove that it's not coming from illegitimate sources, because now he's like, trading with virtual assets which are coming from God knows what sources. And it was a really serious problem, because that's one thing, that his mortgage payment went up because now he is a higher risk client, but all his companies where he was the shareholder and the director had to pay higher banking fees for quite a long time, because the bank considered him as some crypto trader, and that was too much of a risk for them to handle. So that's one thing, that the Bitcoin price goes up, but that's another thing, that if you are a bank, how do you see all of those clients who are cashing out those earnings? So that's definitely something to consider when you're cashing out your earnings, huh?
I have a question. Why was he trying to transfer it to his Main Street bank?
Because he saw that he made 500 bucks. Happy days, let's cash out. I already made my money, right?
Who taught
It
him?
could happen to anyone, right?
Yeah, but who did anybody teach him about Bitcoin and what? Like, it's not stock.
No, right? But hands up on anyone who was actually getting any formal training or banking training of how to invest and cash out on crypto. Usually it's something that you do out of curiosity. You go to whatever exchange, you put some money, it goes up or down, if you're lucky, it goes up. And then you're trying to cash out because you feel that, you hit the jackpot. And that's where the problem starts. So yeah, just be careful, right?
Yeah, I guess that's because the way his approach is to make money. But if you really look at it, Bitcoin, or cryptocurrency, a digital currency, it's just a form of currency that's not controlled by the banks or regulated by some central authority, like the Federal Reserve or whoever you want to name.
That's right.
In your country.
That's
Like,
right.
it just means they're, and I guess that's what makes banks nervous. It's just another currency that could compete with their system that they don't have control over.
And imagine how scary is that, right? Because that, let's say that you've got whatever country, utopia, right? And you are responsible to maintain that society. So you know that if I'm issuing certain amount of utopian dollar, that something is going to happen in the country. And then comes something which can be used as a utopian dollar, which can represent value, and you don't control it. Now, of course, it's a scary situation, right? So that's also something to consider, that if you're running a government, it's a whole different conversation if you're running it good or bad. But if you're running a government, you have to encourage certain kind of economical behaviors, and that's what the central bank is for, right? So that's the main question, that how are you going to have an effect on something which looks like a dollar, walks like a dollar, quacks like a dollar, then it has to be, regulated as a dollar. So that's the one. But what happened with your clients? You remember those cases then when you were, selling the merchant accounts? And I'm sure that you had some cases as well when your clients were asking about how about accepting payments in Bitcoin or any other cryptocurrencies. What was your standard reply on that? Hello? I think we lost your voice. I can't seem to hear you. Oh, we got some technical difficulties. I don't seem to hear you. Maybe I'm the only one.
Can you hear me now?
Now, yes, that's right. You're back.
Sorry. Camera 2's mic is maybe not so good.
Could be, right? So that's why we are doing this, so we find out.
Well,
at the beginning.
Basically, what I was saying was I was approached by people overseas that were asking me if I have merchants that want to accept Bitcoin. They were asking me, do you have merchants that want to be able to accept Bitcoin from their customers? And I was like, well, not that many, but why? And then they said, well, we have a great marketplace platform that we feel would be great for you, because if you have merchants that want to accept Bitcoin, this is a marketplace, and that would allow, those sellers to create their store and then allow their customers to come to their store and pay with Bitcoin, kind of like eBay, Amazon, but you can't pay with PayPal or cash or your credit card. You got to use Bitcoin. Or there could be the option, I think, for other payments, but it was the idea that it was based on being a marketplace for merchants to create stores to accept Bitcoin from customers for their products. And I thought that was super interesting because we don't currently have something like that now.
Yeah.
If
you think about the mass adoption as well, because if you have Bitcoin or any other currency, cryptocurrency, majority of the people are hodling, right? So they don't want to spend it. I mean, of course, that there is a small amount of percentage of people who are using it for everyday transactions, but there are not that many people who are actually buying shoes with crypto, right? So that's another layer of difficulty, that even if you set up this system, that how are you going to attract those customers? But I had a client who was running a crypto casino, and that was very interesting, because that's one thing that you need to regulate the casino itself, because obviously gambling regulations and whatnot. But they added an extra layer of difficulty to allow players to play with crypto. And since there was no regulation back in the day on crypto, they could get around with saying that they didn't, the clients are not playing in money, so the regulation does not really apply on them. So there was some kind of loophole on that, which was very interesting. But obviously, when you are doing a high risk activity like a gambling activity, it just adds insult to injury when you're introducing crypto as well, which is another whole can of worms from the banking perspective. So yeah, it's definitely interesting. So what other news have you seen?
Oh, that's a good question. Would you like me to look? I could look right now and tell you.
I can tell you what happened in Europe.
Tell me. I want to know.
Right?
Like, yeah. Well,
okay. So
I know let me, before we go up, I noticed that you went to like a conference recently. How was that?
Yes. I was in Malta.
And what was that?
It was the Finance Week. Malta is a tiny little lovely island in the Mediterranean. Yeah, just under Italy, and it's an amazing place, because it's close to Italy. They still have this habit of everybody knows everyone, but there is a lot of business going on there, because they have one of the lowest taxations in Europe.
What were some of the topics? What were like the hot button topics that people were talking about at the conference? Or like, what were the most popular panel discussions that people were in the most, that had the most popularity? Because, that's kind of what I like to look at. These conferences, they have a lot of topics and discussions, but really I like to see which ones are the most popular, which are the ones that people are talking about the most, that had like the whole most hot button discussions going on.
Well, this was one day around payments, where obviously I attended, and the other one was on compliance. And there's a massive overlap between the two, so it was interesting to see the different aspects. And there were a lot of management and decision makers from payment service providers. and local payment service providers. But there was a lot of interesting debate about how crypto is being integrated. What are the new regulations around the crypto in Europe? But yeah, the compliance was also very, very interesting because in Europe we over-regulate everything, so there's always something to talk about. But yeah, that was interesting to see all these new developments, because sometimes you get these industry gossips only when you're going to these conferences. That's why I like to go to these conferences, because over a cup of coffee, you get so much information that you wouldn't get otherwise. So that was
Exactly.
the extra thing that, okay, so tell me what works, what doesn't work, and then you can hear all of these interesting information which is not public.
So for the people that are in the United States and want to catch you for a cup of coffee, are you going to be anywhere?
Yes, there is going to be the FinTech and AI conference in October. I have more information about that. The website is the 1 second, is the Fin AI conference. Yes, Fin AI conference, which is redefining financial intelligence, and it is going to be in October. So yeah, that's where I will be. But maybe there is something else happening during the summer, and gives me the opportunity to travel to the States. So only time will tell.
Well, if you want to catch us, Merchant Advisory Services, you want to connect with us, we're going to be at the Mobile Payments Conference in mid-August. That's going to be in Atlanta. Hopefully,
Amazing.
Victoria, you'll get a chance to be there as well. I don't know what your schedule's like, but hopefully
Definitely.
we'll get a chance to see you there.
Yes, I'm hoping for that as well. Yeah, just spice up my August. August is usually a dead month anyway in Europe. Everybody's on a holiday, so that could be a good excuse to escape and see Atlanta. I've never been there before.
Yeah, this is going to be my third year. It's very low key, and it's like, one of the conferences that I started going to, and hopefully I'm going to start to go to more during the year. So maybe we'll get to see some people at those conferences. I'm going to try to go to more this year and next year.
That's nice. Yeah, and you're speaking there, right?
Maybe we'll see. I might. I'm put in some proposals, and we're going to see what they say.
Great.
I like less responsibility these days because I already got a lot going on, but hopefully I'll get lucky and I'll get picked, because I put in a few different ideas for speaking engagements or panel discussions, fireside chat, something else. So we'll see what they think and where that goes.
Nice. Well, what are the topics? Can we know a bit more about that? What are those topics that is interesting to you now?
I'm sorry, say that again.
What are those topics that you're interested in? So
artificial
you're
intelligence and the seamless payment experience, because that's a thing for me. I don't know if people know, but cart abandonment is a huge problem on the internet. And there's a survey done a few years ago with like all the top brands, and basically it that research is still continuing to this day. And what the result of it is that approximately 70% of people who are shopping online abandon their cart. Wow. Not because they don't want to buy the thing, but because there's some other reason, like they don't know how to complete the purchase, that there's something, challenge that's an obstacle that's blocking them, or they just get so frustrated they can't figure out what the next thing to do is, that they just abandon it because they don't know what to do. Now, right. If you can imagine, that's what makes marketplaces like Amazon wildly successful, or eBay. That makes it wildly, because when you have all these little individual companies trying to get it right for themselves, it doesn't work. And that's kind of how the e-commerce ecosystem is now. These big brands or major websites that are not marketplaces try to give the customer an e-commerce experience. And if it's not seamless, on brand, where it's as simple as possible for the customer to get the item, to pay and get out, it's going to, the customer's going to abandon the cart. And one of the big innovations that you probably see on Amazon is the one-click checkout. You know, you hit the button once, it already knows your information because it's got your profile, and then you get to check out and it's done. And then you can even save where you want it shipped and which payment method you're going to have. And it's like that one-click checkout, which is what Amazon's innovation is that gets people so excited to be like, yeah, I'm just going to buy it, and it's easy. Whereas if I go to mom and pop's website to buy my thing, that experience might not be the one-click checkout, and then I leave because I get so frustrated because I didn't get my thing. And
yeah, so, but if you think about it, yeah, if you have a mom and pop shop, right, which is a basic shop, then at least that was my experience with many of my clients, that they wanted to have the embedded payment, the checkout functionality, which is within the website. And the biggest problem with that was that who's gonna then access the data? Because if I'm punching my card details on a whatever and co website, then obviously my card details and my personal information is not safe. And their argument was that if we are sending the client to a pop-up window, maybe they don't have a pop-up, right? Because it's blocked. Maybe it doesn't open the link properly. Maybe the client is freaking out. Oh, I'm redirected to some random page where I need to punch in my sensitive data. So it was a lot of problem with cart abandonment because of that. Yeah. And there are a lot of merchants who cannot really afford to have the data security built into the platform when they are processing a low amount of transactions. And that is also a massive obstacle to embrace your startup to the highest level, because if you can't even keep the client because they are abandoning you because you don't have the embedded payment function, then you can't grow. And that was also a problem.
All right. I like that you said that, because this brings us to the conundrum that every small business owner has. How can I do, compliant payments where I can store my customers' information and not pay such high fees or get ripped off? Because we all know we're starting out a business and I want to get payments online. I have to use one of these online software providers, where whatever it may be, and they all have that same fee that I can't get away from, 2.9 and some 30 cents, 2.7 and some 15 cents, some 3.5 and 30 cents. There's always something that a small business owner is going to have to pay. And it's usually a chunk of around 3% and 30 cents every time you're going to take a payment when you cannot handle the payment processing on your own, which is why you might have to get a Squarespace website. And then you've got, jp.squarespace as my checkout. And that's not a seamless payment experience. You're redirecting your customer to Squarespace's website because they're compliant and they're able to store that customer data, which is why if I go to my local shop and I pay with, on their device, which is a Squarespace, and then I go to the store down the street and I get it again, I think Square will remember me if I use the same card, and it will send the same receipt and be like, oh yeah, it remembers me from one store to another if it uses Square. If I get a receipt sent to my email at one location using Square, Square will remember that if I go to another location that uses Square. And for me, the customer, that seems like, oh, cool experience because it remembered me. So business owners that are on a small level that can't afford to have that complete experience on their own, go to a Square or Shopify or some other software provider that'll give that experience that helps them capture those customers and lower their cart abandonment. But
that's right. But you have to pay top dollar for that, because as you mentioned, these ridiculous fees of like 2.5, 3.5. If you're a startup that even can even go higher, and it's so expensive. And I don't know how many startup companies that you actually talk to on a daily basis, but I would say 99.9% don't even consider this as a problem. Like, they don't even consider this as a big chunk of their profit. And when I start to explain to them that, okay, it's 3% on the gross value, because you're selling something plus the GST or a VAT. So the 3% is immediately 3.5 or 4 or whatnot. And if you put this in relationship to profit, then it could be like 15, 20, 30% of your profit that you're spending on banking and payments. And this is so such a ridiculous amount. And even now, there are not that many business plans which includes this fee, right? They don't consider this is a fee at all.
Shareholders,
and that is,
if shareholders knew, hey, when you're starting out, you're giving up 3% of the gross, they might be like, what? So a lot of these startups don't always say how they're processing their payments, whether they're using a Square, Shopify, or something like a Braintree or whoever. That fee is going to be in there, and they got to find a way not to say that, because shareholders would be like appalled if they knew that when you're starting out, you're throwing away that 3%.
Yeah, but it's 3% on your revenue. So if you think about that, how does it look like from actually your profit margin? Is like 20-30%.
It steals from your profit margin.
It's like
it's not even like coming out of a percentage of your profit margin. It's like saying, no, we're taking it before you even consider your profits. It's a big deal for small business owners, I know. But we specialize in that. Isn't that what you guys do too? That's the thing we specialize in, helping people make sure that their rates are low enough so they're not overpaying. That's what we specialize in. I'm pretty sure you help people with that. Am I correct?
Is it just me, or am I the one who is cutting off?
Could be me.
Okay, you're back.
It could be me.
You're back now.
Is this better? Is that better? You can hear me better now or no?
Because it's coming through. Yes, I can hear you. I can't see you.
Oh, okay.
Maybe it's just an internet, is the connection. It could
be. It could be. I'm watching it on YouTube, so we're good.
A lot of things.
If you're on you, I'm checking the feed on YouTube, so we're good. We don't have any comments, but hey, anyone's watching, you can comment. Let us know.
Okay.
I'm watching the feed, so I could see. We're good.
Yeah, your voice is coming and going. Maybe until you join back. I don't know. Maybe I'm the one who's cutting off here.
Could be, because I see the feed is live. It's good on the internet on YouTube.
Let me see. How do they look like?
No, we're good. We're live on YouTube. It's good. So that being said, if you want to learn anything about how you can accept payments and lower your fee or not get overcharged, and you want to try to understand how you can better accept payments and give your customers a seamless experience when they're checking out, and maybe not have to use a Pinterest or an eBay or an Amazon or some other marketplace to sell. If you are an enterprise or a small business owner and you want to have a e-commerce website and you want to accept payments and you want to lower the rates, or you want to have better experience for your customers, reach out to us.
Okay, what I think I will do, I will just jump out and jump back in, because I might actually have the connection issue from my end. Let's see if I can join back.
All right. Well, Victoria's going to go check out her connection and see what's going on with that. But that being said, go check out Merchant Advisory Services blog. You could learn more about how you can accept payments for your small business or your enterprise business. And maybe you want to set up a website and you don't want to have to use another third party like a Square or a Shopify, and you want it on your domain only. This is called a on-brand checkout experience, where you're not sending your customer off to another website to perform the checkout. And then maybe in that experience, you want that customer to be a recurring customer, a repeat customer, where they're going to come back and maybe pay again for something, and they don't want to have to input their card information again. So you're going to have to store that card information, and that's sensitive data. That's requires a PCI compliant website, and you've got to, maintain data security. So for that, there are certain requirements you need to have. And if you want to learn more about that, or how you can set that up, or what you need to do for your business to be able to do that, get in contact with us at merchantadvisoryservices.com. You can learn more on our blog. Like I said, you can always visit us on the web at merchantadvisoryservices.com. You can even call or text us at 646-780-0802 anytime. Looking forward to hearing from you, because we like solving challenges for businesses that need to accept payments. Hey, Victoria, you're back. How's the connection? Good?
I don't know, right? It's just maybe the connection is now much better than when I left, so what must be my fault. But yeah, this technology is so funny, right? When we are in
Technology.
fintech, then the tech is the issue all the time, right?
That's what I say. Technology is great until it doesn't work.
That's right, exactly. That we all rely on the technology, so that's what it is. So, so yeah, let me tell you about the news in Europe, right? Because I'm not quite sure if you guys know, but there was the European Union parliamentary election at the weekend all over Europe, right? So every European country had to go and vote for the different political parties. But the funniest thing is that many of the countries are still using the paper-based voting system. I couldn't believe in my eyes, right? So there are actually a person who is sitting at the voting place, and he's checking your ID card or passport like manually, like this, and that's how he proves that you are who you say you are, and then give you 5 pieces of paper. I swear to God, right, with a pen, and then you are crossing manually who you want to vote for. Then you lick it in an envelope, put it in an urn, and then they open that urn and manually, like this, counting the vote. I could not believe it, right? In this time and age,
Yeah.
voting is still going in this so
I wouldn't
like
I wouldn't trust
ancient
that.
way.
I don't trust it because people can, fudge the numbers and do what they want after you done the
I know,
thing.
right? And I'm thinking that even if my bank is happy with the identification online, they screen your face and they do the compliance checks, and you can just upload your whatever ID or passport or whatnot, your driving license to identify you. The voting system is still so manual that there's a person who's looking at your document and deciding if you are who you say you are. It was absolutely beyond me. I just came back at the weekend, and I was still under this, and I was like, wow. So yeah, maybe there is a lot of things that fintech is actually can bring to society, at least the identification check, at least the online kind of voting. So yeah, that was a very very exciting experience to see people are still using printed paper and the pen to put the X next to the whatever minister that they want to vote for. So yeah, it was interesting.
I mean, that's a good thing that you brought up. I haven't thought about it like that, but somebody might figure out a way to use the blockchain technology for
Yeah,
counting
yeah, there are.
elections. I don't know if that's good, but it provides anonymity where everybody could
Yeah.
have your key, and when there's a vote, they publicly can see where every vote came from. Who you
Yeah,
voted for last time, who you voted for this time, who you voted for the next time, but nobody knows that's you.
yeah,
But
who
your
are you?
public key vote is there. It can never
Yeah,
be changed. It can never be, someone else can't use it. Like there can be a system that somebody can create some blockchain that allows for voting.
yeah.
And it's
There were a couple of projects like this, and it's very government related, and you have to be, involved in politics to get approved and whatnot. But the whole, like, just the concept of like opening a bank account can be on your phone, but not the voting. So it was like really
I
beyond
think
me.
I think they want to have some central authority that controls
Yeah,
these things. That's the
fair
point.
enough.
That's
Yeah,
the point. When you say no, we don't want anybody in control. We want it to be organic enough to have its own life, where
yeah,
no one person controls it. Everybody has a say, almost like a community. The
yeah.
community is what keeps that thing going, not any one authority.
Yeah,
Because I
I mean,
feel like once
even
you
you can
have
have it
that,
in the hand of one authority. I mean, it doesn't matter if it's like centralized or decentralized, but at least put it online, right? At least just give the opportunity for like technologically we are there to be able to identify yourself online. So just at least that one, not the paper and the urn and the curtain where you're locking yourself in a booth and then you know.
that's so archaic. Exactly. That is so
Yeah, right.
archaic. You have to go somewhere, stand in a booth. They make it seem like it's a secret. Oh, you get to make your choice and do all these things.
I know,
Come on.
right?
Let's be
So
realistic.
yeah. So that's what happened at the weekend in Europe, right? So that was a real eye opener for me. That what we are talking about, the blockchain technology, the fintech, and the innovation, and the whatever. The majority of the decisions in this world are still decided by a piece of paper, right? So that's real eye opening, and there is a lot of room for improvement.
Well,
to say the least.
that's what the dollar is, a piece of paper, a fiat currency that we all agree to exchange. Isn't
right.
it?
That's right. Yes,
a piece of paper. We all agree, hey, if I take this one, you'll take it from me, and I'll take it from my boss, and I'll give it to the guy at the store. He'll take it from me. That's all we're doing, is that exchanging that piece of paper, and it's called the fiat currency. And I think you cover that in the book.
Yeah,
the word
that's right.
Fiat is just let it be so. It means, we all agreed that's what it is. We just agree.
That's it. Exactly.
Let it be so.
But then again, what's the alternative? So that's a good thing.
Bitcoin, Bitcoin, that's an alternative. And then credit cards or debit cards. When I was young, used to think there was something better about a person because they paid with a card instead of the cash. And I think, oh, that guy has the card. He's not paying with cash at the gas station. He gets to dip his card and go. He doesn't even have to go inside. I thought the person who had the card when I was young didn't have to go in the gas station. He could just go dip, stand right there, get his gas and go. I thought there was something elite or exclusive about that person, that he had his money on a card and it wasn't a cash thing that he had to move physically between a person, that had to count it at the counter and put it in the register. I just thought it was so cool when I was young and my dad would get gas. He would go in and pay. And I was like, oh, he went in and paid, and I would buy a thing. But then I thought, like, that guy who has the fancy card just stuck his card and he left. He didn't even come in here. That was that registered when I was a kid. And I was like, the person with the card, I used to, like, for some reason, that just registered with me. And I was like, yeah, that's a thing. And I guess, as we know now, that's like what we call digital money on credit cards. Credit cards were born in when? Like 1950s or 60s?
Yeah, exactly.
Diners Club or something.
That's after the Second World War.
There's a story in your book. Do you want to elaborate on that, or give us the facts about how this was birthed? I mean,
look at you now, right? You were a kid. You were looking at the card, and look where you ended up, right?
Well, I knew that there's something behind there that had to make sense, because we are moving now to a world where I haven't probably touched cash myself in probably a couple of months. I probably had to use it for something recently to give somebody a tip, but that was it.
And there's a good reason for that. And actually, that's one of the first questions that I'm asking usually with my audience when I'm speaking in different places or I'm teaching. One of the questions I'm always asking from my audience, that if I give you 10,000 in cash, and you know that it's only you and me who know about it, no one else, this information will not leave the room. Honestly, hands up. How many of you would put it in the tax return next year? And then, it's like crickets. And that is the problem, because if we can get away with being creative, it's a human nature that we do. And that is the problem, that the majority of the transactions are going through cash, that I can't put a policeman next to every single person to make sure that, did you pay your tax? Did you pay your tax? Did you declare it? Did you pay the GST? Did you? So that's why there has to be something which is, monitoring this kind of activity, right?
Yes, I kind of agree with you, because you do need something to monitor people, to keep them honest. But you have to also think the honor system that you discussed in your book, where people can have a product sitting outside and there's no one there. They just leave a cash box and you just put the money in there and leave. There's these systems where people have that honor system. So if you were to say, hey, we don't have a system to monitor people when they pay their taxes, but I know when there was a time when people didn't have credit cards and we all got paid in cash and it was just cash, people still paid their taxes and reported. There are people that are going to be honest, and we're going to just do the right thing. There's always going to be some small percentage of the population of people that want to try to get over and do the least amount and get over and not pay and not do the thing. But majority of the people that are in a system want the system to work and will do the thing. For example, if you understand you're a business owner and I make money and I have to pay taxes, so that way my community can have services and that there can be schools and there can be, public utility in my community, like I don't mind paying taxes if I'm like a business owner, somebody making money. Like if I were to be living in a neighborhood and I know that my real estate taxes go towards the education system, and I have kids, then I think that's a good thing. I would actually want to pay more taxes if I make a lot of money, because I want my kids to be going to the school that gets the most money. I mean, I don't know. I just think when you frame it like that and you have the system that works, that helps people, then they will participate. But if you have a system that's not helping me, and then you're asking me to, contribute to it, then I might not want to participate if it's not helping me. And that's where I feel like sometimes the central authorities go wrong.
Well, you believe in people, right?
But I agree with you. Like you gotta, watch people and make sure they're all doing the right thing. But I think that there's a good majority of the population, if you create a system that works for them and, that helps, support them in their community and their daily lives and what they're doing, if it helps them, I think they'll honestly contribute to it. It's when you create a system that's not helping that person that they're going to now start to say, how can I now do something else that's going to benefit me? Because that system that they got going on is not benefiting me. They're doing it for their benefit. It's not benefiting me. So let me hide this extra little 10,000 that somebody just gave me that nobody knows. I could see that happening when the system doesn't benefit the person, when the system benefits the authority, the central authority that's in control of it. That makes sense.
Oh wow! Because it's good to hear, because there is a need for more people like you. I might be just bitter because I started up as an accountant, or because I live in Europe, but unfortunately, I see more creative initiative than honest one, and that's why I might just see things through a different lens. And that's.
I see things from a very micro level and then from a macro level because I have to. So think about it like this. I might try to deal with a customer that's a very small business owner, very, very micro business owner. So I see their problems on a very small level, very everyday level. From me to you, one person to another, paying them for one small item. A coffee shop owner, think about it. A coffee shop owner, they're doing small. I deal with that person because they've got these challenges to deal with.
Yeah.
And
these are the businesses what help society anyway, because these are the basis of the society.
This is what I'm saying. This helps economy. This is the basis of our economy. Somebody trying to be an entrepreneur to help another person get the goods they need in their community, and then back and forth. And you think about it, in every little neighborhood, there's that. There's the baker, there's the butcher, there's the fishmonger, there's the, person that is selling some dry goods that are like, supermarket. So you have all these vendors that work with each other because we all need those different things in one community, and they got to exchange something somehow.
Yeah. And I think it's the society as well, because the honesty, how do you call that? When there is a basket of fruit and there is a piggy bank next to it, and the honesty.
I love it. Sometimes I pay more when there's an honor system. Like if you go there and there's a thing and you bushels of apples and you're paying $5 for each little bundle that they give you, I might give 10 and only take one bundle because I feel like, I want to support their honor system. And I hope that it like benefits anyone else who can't maybe afford a little bundle and they can just take it without paying. Fine. I hope my extra 5 might balance out that system, because I think it's helps the community. It's not like, hey, one person exploiting the community. It's, hey, I'm helping everyone who might need it and who needs apples. And if you can afford it, great. If not, there you still have it if you need it to survive. Think that's a great system. And I think if it benefits enough people in the community, everyone will support it. And people who are maybe like me knows that, hey, if it supports the community, I'll do extra to help support it if I have it. Because I know if I don't, it's there for me when I need it, which is the coolest thing in the world, I think.
I wish everybody would think like you, because I saw this system working in a village when there are 20 people and they know each other from birth, right? So everybody knows each other and there is a nice community. And if I plant a flower, it's gonna grow for my kids. So there is a nice attitude towards that. But try to put a bag of apple in the middle of Times Square and see how many people are actually chipping in the piggy bank and honestly just taking one apple per $5. So it could be the effect of the people, that what is their surroundings. So if I am in a small community and I can see that whatever I do personally benefits the society, I will do the right thing. But in a larger scale of things, and what I can see on online, and when we are talking about online payments and online banking, you can hide, right? You don't have that kind of like personal responsibility, so you don't really feel like that. If I am declaring every cent which is coming to me through my online business, then it's going to really help who, right? Who am I going to help? I'm just a website. I am not connected to any park. I'm not connected to any school. I might not see the direct effect of the tax paying. And that's when I see personally, and as I said, because maybe I'm an accountant, maybe I'm a tax accountant, so I am helping people to optimize their taxes as well. So that's why I might actually see a lot of creativity, which obviously needs to be stopped. So yeah, hope for the best, but prepare for the worst, as they say. And that's why I can see that banks are having this huge amount of responsibility to make sure that they are not helping anyone with tax evasion or helping any kind of business to create illegal activities and take payments for illegal goods and services. And I feel for the banks, because there is a huge penalty which is hanging on top of your head, like the sword of Damocles, which is like killing you at any given moment. It is a hard business situation to adhere to different regulations globally and make sure that you are not assisting anyone being creative. And that's what I really see, that that is the problem, that everybody's having a headache and have a problem with the banks, and the banks are asking more and more questions, and less cash is available and in circulation because of that. And Europe is at the forefront of this, because in Europe, that there are some countries when we are paying up to 50% taxes. The summary of the taxes could be very expensive. So that could be the one. Oh, I saw some.
I wanted to, you were talking about this. I wanted to share this real quick. I just did this little research that you were saying, and it's the economic report card in the United States. And it talks about jobs added or lost, the unemployment rate, retail sales, consumer sentiment. So I was hoping maybe I could share that while we're talking.
Sure thing. Yeah, show me.
There.
Okay. Nice.
Ooh. All right. So I don't know, we could maybe, I don't know. I just was looking at that while you were talking because I thought it might be important, or it just we're showing some of the numbers that discuss where we are as an economy. I don't know if this makes sense to anybody, but I like to look at these numbers when, what you were talking about, because these are kind of like the number. This is the U.S. economic report from USA Today. It's the economic report card from USA Today for United States. And I guess it had a few other stats, like how many jobs were added. And it talks about how the unemployment rate, edged up to 4% for the first time in more than 2 years. So these are some of the other stats that go with that when you look at the economic report card for the US, some of the trends that are happening right now. Some of the things that jump out to me are mortgage rates. Can you believe that an interest rate to get a mortgage is 7%?
Well, I haven't been to Europe for a while, right?
Wow.
We are getting used to these kind of things over
that's
here,
the
right?
number that I think, people are going crazy over. Is like interest rate to get a loan is 7%. When for many years, it was like almost nothing. And now all of a sudden it's like crazy.
That's right, because it's going to affect everything which is related to mortgage rate, including rents, including salaries, right? Because rent is affecting your shop rental and obviously the costs. So
isn't that something you discuss in your book? I guess we can plug that again. But basically, mortgage rates, consumer credit card rates, auto rates, home loans, anything that has to do with a loan is usually based on the Federal Reserve's discount rate. And that's basically the rate that the Federal Reserve sets to loan money out to all the smaller banks, which then give out the loans for your car, your house, your credit card, all those other smaller loans are all set by the discount rate by the Fed. And right now, their rate is pretty high, which is making mortgage rates, credit card rates, auto loan rates really high. Currently,
That's
mortgage
right.
rates are at 7 right now, which is ouch.
Yeah. Yeah. I mean, originally, I'm an economist, so I was studying this for over 3-4 years. So the reason for this, because everything has a reason, right? In this world, nothing happens without reason. So the reason for that is that the government is trying to encourage some kind of behavior. And I am going to bastardize this and simplify it to the dot, but more or less, this is how it works. So it puts things in perspective. So let's say that you are running a society, right? And you are responsible to maintain the economy. So you have to take certain steps to encourage some kind of customer behavior. Let's say that you're dropping the interest rate, what we have seen in the States for a long, long time. What does it encourage, right? If the interest rate is low, then more and more people will buy properties, more and more people will invest in businesses, they start their own thing, because the amount of money that they can use to generate further profit is so cheap, because there is not that much of an interest on that boosts the economy. But obviously there is a limit on that, right? Because if everybody is taking a loan and then the loan is getting cheap and available for everyone, then a lot of people will abuse that, right? So they are going to buy more than they need. They take loan that they cannot afford to pay it back, and then it's going to generate some downward spiral. So in this case, the central bank decides that, okay, I'm going to increase the interest rate, so I will demotivate people to take any further loans, which is encouraging people to maintain the existing businesses, which is encouraging people to save money. That means that they will put money in the bank, which then will be lent out to further clients. Because if I'm just giving out money and everybody wants money, where that money comes from? If no one is putting in the deposit, whose money am I going to lend out, right, to the bank? So that's always, it's an upward spiral. It's like going up or going down, and there is a strong reason for every single decision. And the central bank's responsibility is to make sure that they are maintaining a lot of aspects. Obviously, interest rate is just one of those millions of different monetary and fiduciary politics that they can actually introduce, but that is the reason for that. So it's not good, it's not bad, it is something that happens. And the more you know why it happens, the better decisions you can do as an individual, because of the mortgage rate, because of the rental prices, because of the salaries and the spending capabilities, but as well as business, because nowadays everybody's a entrepreneur. So if you're an entrepreneur, you need to consider a lot of different things. And I'm not telling you to be a future teller, because obviously no one can tell the future. But there are certain trends that, as a bare minimum, you need to understand to be able to make like good decisions. So that's all about that, huh?
Yeah, I'll say that's one of the major takeaways that I got from your book, is that when you are more educated about finances and financial products and the terms and what they mean, you're able to now make sense of what they mean to you. And now you can make a better financial decisions, whether it's your business, whether it's your personal life, whether it's like, hey, am I just going to get a bank account and put my savings in there and just let it sit? Or am I going to do something to make my financial situation better by knowing what this means? So yeah, I don't know if
again.
No, that's fine. I don't know if that makes sense, but like your book really drove that point home with me, which is like why, I was excited to have you on this platform, because I feel like a lot of people can benefit and learn from what you're sharing. And then, as we learn and we make better financial decisions, that
That's
impacts our lives and our future and like our quality of life. And if we can make a better decision today and pass that information on to the younger generation or to my, you know, my children or their children, that makes for I guess, a strong legacy and generational wealth, they call it, I guess, which is, I think, is important.
That's right. And I think that there is a
Oh, sorry, Victoria's gone. Here
major,
she comes
major
back again.
problem. Am I here? Okay? So yeah, I think that there is a lot of information which is now only can found in different podcasts, different heads, different discussion rooms, and there is a big need for the basic education, and it doesn't have to be always about investment, always about how to invest your money, but obviously it's important, right? But we need to start with the basics of like how the money is being stored. What are the rules and regulations around your money? What is the risk? What is the fee? What is the technology? Because the more you know, the better decisions you can make. And it's not just as a business owner, but as an individual as well. So we don't need to go far. For example, you want to send some money to your friend in, let's say, in the Philippines. It actually happened to me. I was working as a head of accounts and I had to execute the transaction. I don't remember where was it. It's written in the book. I think, yeah, it was Philippines in Philippine pesos or something like that. But the problem was that I did not even consider and mind. I was the head of accounts. Who was responsible for international transactions at that time, but I didn't even consider that my euro is a different currency than the Philippine peso of the recipient bank, and the money was circulating in the middle of nowhere for months, right, on different suspense account on the banks. And if if no one explains that to you, what you don't know, right? And you're just trying to send your dollars abroad, it doesn't go through, you don't even consider that maybe they don't have a dollar account to accept it, or the bank doesn't automatically exchange your dollars to whatever Mexican pesos or Philippine pesos or any other currencies in the world. And it can affect you as a person. Even though that you are not a banking and payment expert and you don't know anything about finances, this could be so trivial and it can affect your life. So that's why I think the basic education around banking and payments, or what is even money. I can ask 10 people on the street right now. I bet that 9 would not have a clue of what is actually money and how is it stored, how is it transacting, why it has a value. And this is a big problem because everybody is using it, right? So there has to be some basic education around it, right?
Most people don't understand how it works.
Exactly.
You're right. And if you would even ask people in the United States, the institution called the Federal Reserve, the one that controls the monetary policy that you say, if you ask them what the Federal Reserve is or what it does, or are they part of it, they would get it all wrong. They have no idea. It's completely, they're off. So very few people would know actually the facts in the institution around money. And that's maybe why, I don't know, we have some of the issues that we have. And to say one thing, to your point, when somebody has issues like that, cross-border payments that get caught up because of the currency from that country can be solved with digital currency or cryptocurrency like a Bitcoin, Ethereum, because those currencies can cross borders without any shift in what do you call that? Translate, the fee. I get, or how would I say? When you've got to like exchange money from currency to currency, from country to country, that might change a lot. But when you're doing cross-border payments, we both know the price of Bitcoin at that time. So it's like, hey, I don't have to worry about the price of your currency in other countries and all that. I just have to know the price of that if we're just trading in Bitcoin or Ethereum or whatever. So cross-border payments could be solved using digital currencies. But most people don't know these things. And they could if they read your book.
And I love it that we are representing two different sides of the argument, because that also gives the opportunity for me to, okay, it sounds stupid, like defend the banks, but then I can actually explain what is the reason for everything. So when you mentioned that now we can use cryptocurrencies for international transactions, yes, but in case that there is a country which has a problem, internal problem, whatever, the economy is on the verge of collapsing or something, there is one thing that that the central bank or their local Fed or whatnot can make as a decision, which is called the capital controls. So if you don't want your citizens to completely ruin the economy and start taking money out of the country, and then it makes, you know, the currency of that country completely useless, they have this very very harsh, but not that commonly used, but there are still some countries which are using it, which is called capital controls. That means that the country is not allowing citizens to send money out of that country. Again, we can argue because of the political imbalance or the economical turbulence. So there is always some kind of, you know, issues going on. But anyway, that's the only way at that point that government can keep the economy somewhat afloat. Now imagine if you introduce a cryptocurrency which can be sent anywhere, anyhow, you know, completely free immediately, that all these monetary and fiscal decisions and politics are useless. And this is a big problem, because then how am I going to control the citizens of transacting money and safeguard the economy? How am I going to stop the criminals transacting money and sell something that they shouldn't, right? We all heard about the good old Silk Road, which was the birthplace of the cryptocurrency usage as well. So there is a big debate right now that, yes, I am responsible to maintain an economy, a society. I need to make sure that no one is cheating their taxes. Everybody is like acting as they should. But then it comes something which is like overcrossing all my rules, and it can fly anywhere without any further you know, checks. So that can be scary. So I can understand the banks as well, why they see this as a issue. Yeah.
Yes. But you have to understand there's this old saying that goes, who polices the police? If there's no honor among thieves, then this will never work. And the population will see that. So if I see that the central authority or the politician or the banking system, whatever it is, if it's not working properly, then I don't want to participate. And I could say, hey, no, that's not going to work for me. So that's sometimes what happens. And I think that any system is going to have its flaws. So having multiple systems, I think, is okay. And I think if you give people the option to choose, it helps balance things out. Like, for example, if nowadays inflation is really high and there's, you know, the credit system in the United, you know, that we use here, which is based on the dollar in the United States, now we have another option, which is crypto or Bitcoin. We have other options now, which we didn't have before. And I think that helps balance out life a little. It makes things, you know, like I think about times when we didn't have the internet and how now we do have the internet. It kind of leveled the playing field a little bit for like everyday people that we have the internet now. So now some little kid can get online and, you know, have a business because he's doing gaming, streaming. Like that's the internet. And now he's, you know, got a lot, like now he's making money for himself because he's a kid, because he has access to the internet. That was probably not possible a long time ago. If I was a kid and I said, hey, I want to have a job playing video games all day and to get paid for it, they would have looked at me like I was crazy and said, no way. Nowadays, that's the dream job for every young kid. It's like maybe not video games, but whatever it is, being an entrepreneur, selling my, you know, creativity, content, whatever it is. That's like, they would rather do that, I'm pretty sure, than work the 9-to-5 job that they've been sold, which was the American dream. And that's, I think, a portion of what's contributing to our economy right now. How young people are not interested in going into the office. They're not interested in working at that company. They're more interested in investing into themselves and being on social media and building their following and building an audience and putting out content and creating what it is they want. And you know, trying to monetize that.
There's so many things to unfold here, and I agree with you on a lot of parts, but you know, there is one thing that which could be good and, you know, ideal for everyone, but there is a harsh reality. I don't know who said that the problem with the democracy, that someone is always going to be, you know, left behind. And that's the problem, right? Because you can't have 100% agreement any kind of group that you go, good, bad, it's a whole different conversation. But the problem here is that you create a law, you create some kind of decision which is voted by the majority of the people, but there's always going to be someone who is not happy, who is trying to, outsmart the system or create something good or bad. And obviously that's the basis of the innovation, right? Otherwise
Yeah.
we wouldn't have innovation if there would be no challengers. So that's good.
I think that's okay. I think that's normal. In any society, there's going to be outliers on either side. There's going to be that. And so you just deal with that sometimes. It's not the worst because that's not the majority.
Yeah, exactly. It's just when it gets into the majority and people take advantage of certain loopholes, that's when it gets dangerous, when people are transacting in crypto, not because they believe in the free movement of money, but because they want to cheat tax and they don't want to declare their earnings. That's when the problem starts. And that there has to be something to.
You know what I think is a big problem? And I hate to use this word. It's corruption.
Yeah.
It's unfortunate, but there's this quote that I believe in, and I think it was Vonnegut who said that, is that power corrupts, but absolute power corrupts absolutely. And this means, and I agree with it, if you give me ultimate power and control, I'm probably going to abuse it. I'm most likely going to abuse it. If you tell me, hey, you got all the power, nobody can tell you what to do, most likely I'm going to abuse that power. That's what that saying means. If you give me some power, I might abuse it. If you give me all the power, I'm definitely going to abuse it because you have, So
sorry.
No, that's fine. I was just pointing out that, that quote matters to me because if you give somebody absolute power, they're definitely going to abuse it because they have no control, no checks and balances. But I believe if you create a system where there is some power, but there's some checks and balances, then it could work. But when you give absolute power to one authority, how would they not abuse it? It's like you're giving them one person the key. Of course, they're going to abuse
human nature, right?
Yes. That's the point. So we can't have that. It's got to be a communal type of thing where it's like, hey, not just you hold the key. We all hold the key. We all trust each other because we're all liable to this thing. And if it falls, we all fall. That is, to me, accountability. That's real accountability, not one person saying, hey, I'm going to make sure that this doesn't fall. No, you're not. You're not going to make sure this is not going to fall. You're going to make sure it benefits you, period. That's just the way it is. But if you put 20 people in there who all stand to lose if this thing falls, they make sure you're accountable, I'm accountable, we're all accountable because we're not going to fall. That to me is like community. We're all counting. That's accountability. You're counting on me. I'm counting on you. If you're not here today, then I can hold, cover for you. But that means we all have to do that all the time. That, to me, Matt, that's really what matters.
Yeah, and I agree with you. That should be the ideal scenario when everybody is, taking care of everyone. But as we see in the nature, as soon as there is
hold the system up for everybody, so that way, if one person fails, it doesn't matter. We all got you, and everyone has that same mentality. That means the system doesn't fail. It's like when you put it on one authority who says, "Hey, I'll be the king, and I'll make sure everybody eats." Of course, the king is going to eat the best.
Yeah.
That makes sense. Of course he's going to do that. But if you say, hey, no, we're 100 farmers, we're going to make sure everybody eats and everybody's family eats. One farmer's sick one day, it doesn't matter. The next farmer next door to him is going to pick up the slack. And that happens every day in, day out. Just think about it.
But is it viable though? Because if you put together 10 people and give them a task, what's the first thing that they do?
Well, eventually what happens is it has to be
a leader,
small
right?
enough these people control it themselves, but it's got to be the community. I believe the community. Think about like Indian tribes, people of a certain group that in a certain area, they have to survive. They all will depend on each other no matter what. And it's like, hey, if my survival depends on yours, that's what matters to them. And they'll be accountable to each other for that. I think that's real community when you're accountable for your neighbor and you're making sure that, hey, my neighbor's okay. They're making sure I'm okay.
But it's very, very hard. And we saw some projects which were the DAOs. I don't know if you heard about them, the decentralized autonomous organization. So the whole idea is that right now we've got a company. The company has a director who's going to jail if something goes wrong. There is a shareholder, which is benefiting everything what the company does. And there is a clear structure on who does what. Now, these decentralized autonomous organizations are usually on that kind of blockchain when everybody does everything and everybody benefits in the same way. So as you say, there is a community, they're working towards the same goal, they're helping each other, and they share the profit and they share the benefit. What's the first thing that everybody does? Because they have the same voting rights, right? The first thing that every single DAO, at least, majority of them, and really kudos to the exception here, is that they are electing a figure which is making the decisions on behalf of the community, right? Because I'm busy, because I've got millions of other things to do, because I don't even know what I'm voting for. Just let's appoint one person who is taking a bit more than the rest of us, and then that person can make the decisions on behalf of us, because I don't know, because I'm not educated, because I don't care, because I don't have the time, and you're going back to the original system when there is one central figure which is maintaining the community, which is maintaining the rules and regulations, which is overseeing the function. And obviously I'm not going to work for free, so I'm getting a bit more out of the community pie. And this is the problem, that ideally, yes, it should be a farmer, 100 farmer who is putting together all the crops and everybody is great and everybody's happy. But
or even if you just said, hey, 100 bankers, just give me 100 bankers or 1,000, but like instead of it being one reserve bank, give me 1,000 of them that I know, okay, they're all watching the others back. It's not like you can only trust one person who has the complete control and nobody can question that authority. That is the absolute power that's going to corrupt that authority.
Yeah, but who's going to be the leader, right? Because that's what we wanted to do in the European Union. And
I believe if people feel that there could be a leader that they trust and they say, hey, we want to elect that leader because we believe that person could lead us somewhere. And they say, hey, we want you to be the one out of the 1,000 that we follow to, help us get somewhere, because that person may have knowledge, information, maybe a process that works, and we're like, hey, we're going to now do all that idea. Like, for example, that's great. For example, I look at Henry Ford, he's kind of like the father of how we did mass production. When everyone's like, yeah, we're all going to do mass production like that moves the whole industry forward. Not because they all said, hey, you have to do it like me. People saw that innovation was great. He was one person who made something, innovative, and a process that everybody could repeat. I think that helps the community, and if everybody does that, that was cool. So I think when innovation helps the community and we all push forward with it, that's a good thing. But if it's like one person using it to their benefit to control the rest of the community, that probably won't work for that long.
But who says who is right and who is wrong? Because as we said, in the democracy, that like half of the people are going to be, yay, that's great, that's the best thing ever happened, and half of them are, boo, this is horrible, we need a new leader. So it is very hard, and I agree with you. This how it should be, and I completely agree with complete equality. It is just so hard to actually maintain, even on a small group level, let alone when you need to run a whole society. And that is why we have rules and regulations and laws and restrictions
yeah, that's the saying that I used to hear all the time when I was young, and I would say things and I'd question my parents about money and why it was a certain way. They would always tell me, well, this is the system that we have. This is the system that we have, and that's what we have, and it's all you're dealing with. And so when I heard of Bitcoin being like another type of monetary system, I was excited about it, because when you have cash and then you now have credit system, that probably excited the person who's like, yeah, we'll have credit cards one day. And that person probably was excited to have a credit card when they got older. Yeah. My dad's not here. He probably never got a chance to experience what Bitcoin was like. He was only a cash person that saw credit cards as like the next step. Me, I'm excited because I'm like, yeah, I saw those, and now Bitcoin being another alternative, or even just not Bitcoin, crypto or digital currencies, because they're all kinds. They're stable coins. Again, you can learn about this in Victoria's book. Moving Money on Amazon. It's available now, but you can learn about these things in her book. And I just look at it as an alternative, kind of like now we have electric cars. We had gas before, now we got electric, and you can pick.
That's right.
Gas cars are probably not going anywhere for a long time, because some people still have their collectibles from 1900s. 1920 cars are still collectible thing. So the gas-powered cars are not going anywhere anytime soon, but you have the alternative of choosing an electric car.
Yeah. Definitely, blockchain has the big difference compared to the current system, that it's not built on credit, and that is alone a huge achievement. That it's not really like a Ponzi scheme. Then the new players are feeding the whole system, and at one point we're going to run out of the newcomers, and the whole thing is going to collapse. So at least that problem is eliminated with that. But again, there has to be some kind of central figure which is controlling things, or at least typing in all of those self-executing contracts, the smart contracts.
Here's a solution. Every country that has a central bank then just creates a node or a set of mining computers that can compete with all the other miners out there. That's all. Just every central bank, get your mining rig together, put the money up, get a rig, get a node, and start doing the calculation, some currency in whatever currency they want, whether it's Ethereum, Bitcoin, whatever. Get some nodes, get some servers, start mining them, and be a part of it. So now you can contribute to that same thing. So let's just say, all the other servers that are out there that go down eventually, then our governments have got the computers of last resort that, hey, when everyone else's computers go down, they've still got the nodes or computers that can run the calculations so that we can still trade Bitcoin. That's possibility.
They have this central bank digital currency. So that's the whole new approach, that there is still a central government which is controlling all of these currencies, but at least it's digital. So it's not built on these kind of credit system. At least this is the whole idea, that they are innovating, and there are some digital form of the fiat currency as it is now, but it has the capability to actually make the whole system new. And there are some pilot programs. I think I'm just looking at the internet now. I think that there was a pilot program. Where was it? I think in the largest CBDC pilot in the world was China's digital yuan.
You should pull it up. You should look it up. I do a Google search. Tell me what it is. I'll do a Google search and I'll pull it up.
Yeah, so CBDC, central bank digital currency, China's.
Yeah. I've been hearing something in the news about that.
Yeah. So this is basically, in my opinion, could be the nice cushy middle ground between the wild west of cryptocurrencies, when you can generate value out of thin air and then take advantage of the loopholes of tax evasion and money laundering, but also it's not a fiat system, which is like
every bank should have a digital currency. Every country should make a digital. Any country that has a central bank should make its digital currency.
Yeah. There is a big argument about it, because if it's digital, then the government can take it away, shut it down, reverse it,
something like that. Yeah,
see where it goes.
That's the equivalent of what they call like a stable coin, right? From your book again. You can learn about stable coins in Victoria's book, Moving Money, on Amazon right now. But stable coins are based on another currency that's stable, like the dollar. Right?
Yeah, and that was the biggest loophole of all this money laundering, to be honest with you, because the most traded crypto asset was the Tether, which is 1-to-1 to the dollar. So people still used it as a dollar without regulation and checks and restrictions. So that was a beautiful loophole for a longest time to actually transact value, pin it to the dollar. It looks like a dollar. It can be transacted as a dollar. There is a value, obviously, the dollar, which is backing it up, and you could take advantage of the cryptocurrencies parts, which is anonym and not traceable. So that was the biggest problem with that. Right now, I think there is a new law which is coming out, or even came out, which is requiring every stable coin to be approved by the central bank as well, because the major problem with these stable coins is that there is something which is used as the currency, but it's diluting the existing pool of currencies. So instead of just saying a number, 200 trillion circulating, there is now a 250 trillion circulating, which can be really badly affecting the whole economy and obviously monetary and fiscal politics, as we said. And that's why the stable coin has to be licensed and approved by the original currency issuer. So that was another problem with that, but there is something, yeah, which can be translated. The value can be translated into blockchain, which is a brilliant new opportunity now to make the most of both worlds, really.
In the news, I don't know if anybody can. I mean, I don't want to talk about too much that's in the news, but in Cointelegraph, they're reporting that the National Bank of Georgia, which is in Republic of Georgia, they are trying to deepen their collaboration with the CBDC, and they're going to partner with a cryptocurrency called Ripple.
That's right.
They're trying to make the National Bank of Georgia is trying to make a digital currency, and they're trying to partner with Ripple. So there's that.
Georgia is extremely innovative, and I have a lot of clients who have a Georgian virtual asset provider license, and it's a very, very welcoming environment for all these new innovation, blockchain technology, Web3. There are a lot of new things happening in Georgia because for some reason the regulators and decision makers are forward thinking enough to introduce new friendly regulation towards these kind of startups. And Georgia wanted to be one of the biggest startup hub around these technological innovations. So they are doing excellent work on that. The other very notable country was Estonia and Lithuania out of the EU, which was also at the forefront of this innovation. Then different other countries wanted to follow suit. So one of the projects that I was also involved in was the San Marino, which is a very tiny little country within Italy. And also they started to issue virtual asset provider license. So there are a lot of very interesting things are happening in Europe, which is super interesting. I know that US is a whole different ball game in terms of banking, in terms of regulation. So there needs to be still a lot of harmonization to be done with the global payment flows. But there are quite interesting projects happening actually in Asia. Africa is a huge market, and they are very, very, very interested on how to start on the blockchain projects. One of the biggest innovations are actually coming out of Nigeria and Kenya. So Kenya is the fintech hub of Africa, obviously together with South Africa. But there are some very, very interesting companies there and very nice innovations which are taking place in those countries. So it's definitely interesting to see what's going on in the other side of the world.
Well, I want to talk about some of that. I don't know if you are interested, and I'm going to share some of my subscriptions with you, Victoria, so you can get some of them. But if you check out the Digital Transactions, which is a e-newsletter for trends in the electronic exchange of value. It's called Digital Transactions. It's like an online payments magazine. And they have an headlined article about MasterCard's AI-powered shopping muse has been deployed by the Michael Kors website. And I think that's kind of interesting because MasterCard apparently acquired this technology from the McDonald's Corporation in 2022. And it's called Shopping Muse, and it employs artificial intelligence to make recommendations and personalize the shopping experience on the Michael Kors website. And MasterCard says right now in their early tests that it's shown an approximate 15 to 20% higher conversion rate than traditional search queries. So the tool is labeled Your Style Assistant, and it's activated from the Michael Kors homepage with a button. So it's a pop-up window, and it appears in a little search bar, and then it's with some suggested search terms. And then it gives you results, for things that you might want. And this basically helps Michael Kors get a higher conversion rate.
Well done. I think is well done.
Yeah, because I think
that's super interesting.
Yeah, because that's solving the problem, I guess I was discussing earlier about cart abandonment. When you can personalize the shopping experience, make it better, cooler, easier for me to just buy what I want and go and come back and do it again as often as I want, you're going to probably keep me as a repeat customer.
Yeah, couple of years ago, there was some AI conference. I can't remember the name, in Dubai, and I came across a very interesting project who was doing digitalization of real life items for fashion. And that was a very interesting project. Basically, what they did, that there was a big table at the middle of the room, different cameras around, and you can put anything there, and they can digitalize it in a way that you can put it on the website, you can walk around, you can see the real life size of that item, you can zoom in, you can see it from every angle, and it was much more than this 360 view of the item. You can actually personalize it to your body. So there was a tool which, if you gave your size, your height, your whatever chest size and waist size, then your avatar could be either wearing that item, or when you're holding the bag, you can see that how big it is. So it really enhanced the shopping experience. And they were trying to do this project also for furniture. I think that this is something which is happening now in the US, when you want to buy a sofa, right? And you don't know if that sofa fits or how does it look like. They are using the virtual reality to place that sofa at that corner when you want to buy it for, and, you know, obviously the, you know, the color and the size and whatnot. But they are translating this to fashion as well, which is, in my opinion, super interesting, because that can really ease the shopping experience. Not just lazy people like me who can't be bothered going to the shop, but it can help a lot of people who don't have, the physical capabilities to go there and like squeeze in the fitting rooms, or they have any time restrictions, or they just live in an area where they don't have the opportunity to go to, you know, Michael Kors and wear those clothes. So that's definitely interesting. And I think the most interesting part is that how, you know, MasterCard and Visa and all of these big giants are chipping in, hoping for some extra revenue. Good for them. This is definitely something that is good to support, and this really helps them to innovate their product further as well, with the shop cart abandonment issue, with the customer experience, everything.
You use Amazon, am I right? You use Amazon, right? You can hear me, right? You use Amazon, right? Okay, well, I'm sure we all know when you use Amazon, there's the option now to see how an item looks in your room. And it's weird because they have it on like every item, but some items I don't need to see if it fits in my room, for example. Oh, so yeah, you're back. So you use Amazon, am I right, Victoria?
I lost you for a second.
No,
for
you use
technical
Amazon,
problems.
am I right?
Sorry.
You use Amazon, am I right?
Yes, I have to.
I was going to say the one example that we all know now, when you go on Amazon, sometimes they have the option to say, hey, see what it looks like in your room. That's like an example of the virtual reality that we might all see. And I'm sure certain things, like some products, I don't need to see how it looks in my room, but certain things, maybe if I'm shopping for a big screen TV or a sofa, like maybe I want to see how that item might look in the room. So Amazon is one example of how we might see virtual reality being used for sales. That's one thing I think a lot of people might have come across nowadays as an example of using it. Yeah. I haven't come across one where I can like shop for it and like see the clothes on me. I wish I could find somewhere where I could do that, but hopefully that's coming.
Me too.
But for now, I noticed that, like, in Amazon you could do that.
Yeah, exactly. Me too, really, because it all helps me to save time and to obviously see the items in a much better way. That reduces the returns, that reduces the friendly chargebacks. You know how clients are sometimes.
Friendly chargebacks. Wait, what are friendly chargebacks? Oh, by the way, if you want to learn what friendly chargebacks are, you can read Victoria's book. It's available on Amazon. But tell me what friendly chargebacks are. What is that? Because some people who are listening probably don't know what that means.
There is a joke which is older than I am in the industry, which says that there is nothing friendly about a friendly chargeback, and this
No,
is the
there's nothing.
truth. So
No, but
basically,
they call it like friendly fraud, maybe, because you get a chargeback
yeah,
from friendly fraud, and that's what's that really called? What is that? What does that mean?
exactly. So the friendly chargeback or the friendly fraud is when a family member, you're claiming that the family member took your card, you didn't intend it to do that purchase. When you're trying to outsmart the system and you issue a chargeback, even though that it shouldn't be given to you. So it is not fraudulent in the criminal level, but there is still reported in the system as a fraud, and obviously a lot of merchants are fighting against it because it can
Yeah,
be increasing the chargeback ratio, and obviously that can be damaging for your relationship with your bank and the merchant account and whatnot. So no one wants to be obviously appear as a fraudster. So even the friendly
exactly.
fraud is a type of a fraud. So that's the reason that we are fighting against it. But it is quite commonly used still.
Yes,
That if you order something and you change your mind, and you run out of the return time, and you say
there
that,
you
oh, I
go.
never got it, and
Yep.
then show me that you didn't get it. Obviously, there is no proof that you couldn't get something. So there could be a lot of opportunity for
Yeah. People
mistreating
might
the
use it for
system.
the wrong thing.
Exactly,
I,
exactly.
I, in my experience in doing payments, the way I have approached it was customers sometimes make a charge using their card. And when that charge shows up on their statement, if they don't recognize the name or there's something different or there's like whatever, this can lead to friendly fraud. So, for example, if I walk into my local deli that says Tom's Diner, and then I pay with my card, and at the end of the statement, it says Fred's, Food Mart. I might get confused and wait a second. I never bought anything at Fred's Food Mart. I buy at Tom's Diner. Fred's Food Mart might be the name of their business that's incorporated that shows up on the credit card receipt as the statement indicator. And then maybe Tom's Diner just might be his brand name that he's put on his store. And so friendly fraud can happen like that, where the business has a different descriptor listed for their credit card payments, and the person that purchased it doesn't recognize the name, and they are like, wait a second, I never made a purchase there. So they do that accidentally, thinking that they didn't make that purchase. And this is one of the things that I always make sure with my business owners, that hey, when I set them up, I make sure if that a person is going to make a payment with them, that the statement descriptor matches what the person is getting, even if the legal business name is different. Because you might have Alphabet Incorporated, but then you have Google. And if I buy something from Google, if it's something on there that says Alphabet Incorporated and there's nothing that makes me register that Alphabet Incorporated is Google, I might call up my card company and say, hey, I never purchased anything from Alphabet Incorporated. I'm not paying for that. And that's what could be, considered friendly fraud, where the person doesn't really know. They made, it's a mistake, honest mistake, because they didn't identify that business as the one they made to purchase that. So I educate business owners on this, and I say, hey, make sure your statement descriptor when people are paying you matches what you're selling, so that way you don't encounter any of what we call friendly fraud, where the person, they're not meaning to get away with the money, but they just didn't know. And then there are some cases where, hey, we kind of know, somebody went and spent too much money over the weekend they shouldn't, and they call and they're like, oh, I didn't spend that, I didn't do that. And so there are some unscrupulous people that might abuse that privilege, but it's really something that's accidental that people didn't mean to do. And then that business owner has to deal with proving that customer paid it. Or what I make sure that, what I make sure is that my business owner's a statement descriptor matches, so you don't get that type of fraud. We call it friendly fraud, because the person really didn't mean to do it. They just didn't register with them.
That's me, huh? That's right, me that you described. I'm carrying my way through all my banks. I'm sure that they hate me because, if you're in the industry, you pay attention to all of those things. But how many people don't even check their bank statements, and there are like screaming out obvious problems there, and they don't even consider this. But actually, I have two funny stories for that. One was when one of my clients contacted me. And they said that, listen, there's a problem. I am involved in this merchant account provider, and they just can't give me the proper descriptor for my name. This is the thing that you mentioned, the name of the shop. And he told me that the problem is that I'm getting a lot of chargeback. People don't recognize my company name, and I can't do anything with my payment service provider. Help me to figure out what was going on. Now, it was happening that merchant account provider pooled the accounts together. So what happened was that merchant account provider get all of these traffic, acted as an ISO, signed up for the merchant account on his own, gave a whatever descriptor, 123, or I don't know what was that, and all of the traffic went through that same descriptor. And they said that, yes, I have a higher risk appetite because obvious reasons, right? I can take you when no one else can take you, but it comes with a caveat that the descriptor is going to be 123. So deal with the chargebacks. And instead of risking anything, they honored the chargeback automatically. So the merchant couldn't even have the opportunity to fight, those chargebacks. So some small things, you can still see that if the payment provider, the ISO, the merchant account provider is trying to be clever, because there could be some little parts which can reveal the trick, right? Obviously, if you don't know it, then how would you figure it out? But the common descriptor is one of the major things that you need to pay attention, because if that happens, that means that the merchant account provider is pooling transactions and your money can be gone for reasons that you don't even have the authority over. It's not even your fault, but someone in the pool does something wrong and your money is disappearing with it. So that's one of the things that it was a funny story.
That's a great point, though. That's a great point. You should be able to, if you cannot control the description on your merchant account, that's a red flag.
Yeah, what's going on?
You can learn more about that in Victoria's book on Amazon. But if your money's being pulled into some other merchant account where you have no control of the descriptor and it's something generic, it could be a problem for you down the road. You want to be able to control your descriptor, which means that's your merchant account.
That's right.
I guess here what they call payment facilitators, and they basically aggregate payments for one day for a whole group of companies, and then they settle all of them. So that's what they call like payment facilitators. That could be like a software company that has, all these people that have signed up today and have run transactions or whatever. That could be a software company that facilitates payments, like a marketplace. Let's just say those things exist, and those things are necessary and people need them to exist. But
but obviously it comes with an added risk that you don't necessarily know about, right? And if you don't know, how can you calculate with that risk, right? And the other funny story was there was a certain gentleman's club on the high street. And, proper gentleman's club with the ladies dancing on the pole and whatnot. And every time that you were swiping your card, it went through with the descriptor of the bakery, which was above that club, right? Because it was run by the same organization. And that was basically an urban legend that everybody who went to the gentleman's club and swiped their card looked like that they spent money, thousands and thousands of euros in the bakery, right? So the wife, if they are checking the bank statement, they see that whatever bakery took 2,000 euros. They're like, how much of a bread you are eating, right? But it went through everything, the drinks orders, the tips for the ladies, everything that you swipe through your card ended up under that bakery descriptor. So that was quite a funny thing to see.
That's a thing. Yeah, that's a thing here. Business owners that have businesses that are like that, they change the descriptor so that way the wife doesn't see it as that. So you might be, the show palace or whatever for, the strip club, but then they change the description to like ABC Corp. So that way you don't really, and it's like $2,000. You could just be anything. That could be, we all bought office furniture from them. And nobody knows the description is, the exotic palace.
Exactly. That's like pastries, right?
I deal with some high-risk business owners that want to change the descriptor so it doesn't say what it's supposed to be. It's just like corporation. That Tom's Corporation, Tom's such and such corporation, instead of it being, gun distributor of Ohio. You know what I mean? Like they don't want that descriptor to show up for some reason on some people. And maybe they do, but there are certain businesses that don't want it. They just show you the standard corporation because they know the person that purchased there probably wants to be discreet about what they bought and doesn't want everyone on there looking at their statements, seeing that they're purchasing these things. Certain business owners that have that merchant account want to maybe don't put it out there for everyone to see. And one might be a strip club owner. Doesn't want all his clients' wife seeing, the exotic show palace showing up on their statement every month.
That's right. That's
That,
right.
and that could lead to friendly fraud. The wife might be like, "Hey, I'm looking at a statement. We never bought anything, no furniture," and then the strip club's dealing with some friendly fraud.
Well.
Because the husband's
Photographic
not going to come
evidence
and
of your
claim it. He's
husband.
not going to come and be like, "Yeah, no, we did spend that money at the strip club. It's really called something else." He's not going to do that.
Exactly. Oh yeah, this industry has so many funny stories, and that's what I love about it, because every day you face some interesting case, and there's
Well,
no 2 days the same,
well,
right?
welcome to the payments industry, where that's what happens. Like, I deal with these pain points from business owners every day that might have these issues. It happens. And if you want to get in touch with us at Merchant Prime Service, because we can help solve problems for you. I have a case study of a merchant who had to deal with chargebacks because he was selling pizzas, and people were ordering pizzas in bulk for like catering and having it delivered somewhere. And then the person whose card that they used would receive the charge a few days later, and they'd say, "Hey, I never ordered those pizzas," and he would get the charge back for it even after he delivered 20 pizzas somewhere.
No
And I was like,
way.
somebody made an elaborate thing to go about getting fake cards to charge 20 pizzas to a business owner who was pretty new. I had just set him up within a month or two, and he was new, and he didn't know about chargebacks and how to keep the receipt. And he got a huge catering order. He thought he was winning. Someone ordered 20 pies. He was like, "Yeah, I'm gonna get 20." They ordered catering. He delivered it. He thought he was getting 2 days later. Person's checking their statement, and 3 days later they see, "Oh, we didn't order that." He's getting a chargeback saying almost like $400, $500, $600 in pizza 2 or 3 days in a row. Over 3 days in a row, he lost like a few $1,000s of pizzas he delivered because of a chargeback situation. And like, we had to help him research and go through all that, and basically had to educate him on how to accept credit cards and how to identify the person and check that the card matches the ID of the person, because that can happen when you're accepting cards and you don't match the ID. You don't know who the person is that you're speaking to, and they're just giving you any card number.
That's right. Yeah.
So,
but it happened in Barcelona as well. We were out with my friends, and one of my friends just lost her bag. Right? She was robbed, and when she went to the police, it has been reported that they tried to use the card in some fast food restaurant with some ridiculous $20 charge, which had cameras all over. But the problematic part was that there are so much of these petty thefts in Barcelona that the police could not really do anything with that. So unfortunately, even though that it was an obvious crime, there was not that much of a damage. It was like whatever, $20. So they told my friend that I'm sorry, you should have like blocked your card as soon as it got stolen, because at the moment we can't really do anything, and we don't have the relevant police force to send over this petty theft, who is like this opportunity criminal who is trying to use your stolen card in a fast food restaurant. So sometimes you see that as well, that there are crimes, that there are fraud activities. But then again, if you're a merchant, you might as well just as much be a victim of that actually a person who owns that card and gets robbed. So there are a lot of aspects of this, which again, if you don't know, you don't know. So that's why there are so many problems that can cause such a huge havoc. And you need to at least understand those and get ready for those before you make the relevant decisions, right? That's right.
So
you're back.
No, I don't know if you can hear me, but I'm using a couple of cameras. I'm getting better at this,
Great. Perfect. Yeah.
We're
As long as you're moving
angles
forward with more and more stories and more happenings, then at least I think with episode 10 we're going to be pros.
Man, well, I mean, I could share more stories. I just don't want to bore people. But yeah, like, there are tons of horror stories that I could share with you about business owners that had to deal with some issue when it comes to their money. And let me tell you, it makes people lose sleep when they don't have their money and it's owed to them, because they have bills to pay. There's, their money, whoever it is that you have to pay your bills to is not going to wait for you to work out your payment problems with your customers. So your rent is due regardless. Your utility bills are due regardless. You've got to, if you are a business owner, got to keep your inventory or buy more to sell more, even though you just sold things and didn't get the money for it yet. That's a big problem. So, I guess that's kind of what I do in the payment space. And I guess that's what you do. We help, I try to help business owners solve these problems so their money can be in their bank account as soon as possible from when they have sold it, from when a customer pays with a card. Because cash, it's a little different. You get the cash right there. You can do what you want with it immediately. You can go out and replace that item right now. But with a credit card, there's settlement involved, right? And again, you can learn about how banks settle money with Viktoria's book on Amazon. And basically, when payments get settled every day, it moves between bank accounts and merchant accounts, and there's a settlement period. So if you need your money right away, you might want to try to learn, what type of account you have. If it's a bank account or merchant account, when that money will be settled, when will it get to you when a customer pays you? And you can learn more about that in Viktoria's book. Right, Viktoria?
That's right. Yeah. That's the book.
There's a great illustration that you have in there that talks about settlement days, like T plus how much, right? Am I right? I guess if you check out Viktoria's book, she discusses how when you're looking for a merchant account, so I was saying in your book, you discuss settlement times, right? Which is T plus a certain number of days, right?
Yeah, and so many people are going wrong in there because there are certain standard times, and sometimes you don't even read the contract, and it can really screw you over because you've got a business to maintain. You need to have a proper cash flow. You need to pay your manufacturer, your providers, your partners. So obviously you need to calculate that when that money hits you, because I actually came across a lot of business owners who thought that if I'm taking a card, every time that my client swipes that card, ping, it shows on my bank account. So if I'm selling a coffee for $5, ping, $5 is going to appear. If I'm selling this, selling that, it's not always the case. And the majority of the time, it is not the case. And the biggest problem with that is that the merchant account holder is holding your funds, and then in one bulk at one point, maybe at the end of the day, if you're lucky enough, but if you're a startup, usually they don't want to deal with your $200 settlement. Then at one point, they settle you when the amount is over a certain volume, over a certain amount, then you don't have access to that fund. And many times I have seen that mainly when you're involved in global trade, which is not on the local bank account system, that after the merchant account provider is sending you the settlement, sometimes it can take 3, 4, 5 days to receive that money if it's going through the SWIFT system. And this could be an absolutely choker when you're a small business owner and you need that money as soon as possible. So that can also lead to serious problems and serious delays. And that's also one of the things that a lot of startup companies fail at, because they don't even consider this: fees, settlement times, risk, doing your proper due diligence on your partner who is holding your funds. Like, at least just make a quick research on that payment provider, mainly when you're getting involved in business globally, because you might actually know your local providers, but when you're opening to new markets in Africa, in Asia, in Europe, in Latin America, you should do your due diligence. And trust me, it's not that easy as it sounds. So there are a lot of things that you need to consider when you trust your money with another company. So yeah. Oh wow, we are talking already for like 2 hours.
Isn't that what you wanted? Isn't that what you were supposed to do? That was our goal, right? Because last time was like a little too formal.
A little
a little too short, a little too formal. And yeah, it was new last time, but this was more like an organic conversation where we were just going off the cuff. I think worked a little better this time.
Yeah, I love it. I love it because you are bringing your stories. I'm bringing my stories, and I'm sure that there are a lot of interesting information that we talked about. That may it is obvious for us because this is our job, right? But it might not be that super obvious for people who are actually suffering these problems on a daily basis. So at least we can create some kind of value by sharing those problems and sharing those reasons behind those problems, so people can learn from it.
So we want to, for those people that might have missed it earlier, tell them about your book, because we've been talking for a little while. We mentioned it in the beginning. Right. I think we should mention it again at the end so people can be familiar. And I have a ticker at the bottom, which you can check out. Victoria's book, Moving Money, How Banks Think. It's available on Amazon right now. The link is in the ticker. And you can also, yeah, there it is.
That's right. So this mentions everything that I already explained to my clients over and over again. So this book is a summary of the most common problems and the most obvious explanations about issues around payments and banking. So that's what I summarized in this book. As you said, it is available on Amazon, and that's the whole idea of the podcast, that we are creating some kind of understanding, education, safe space, informal communication and low chat between us about these problems, and hopefully we can reveal a lot of hidden information of this industry, which could be valuable for people. So I'm hoping that people will join us, watch this episode and all the other episodes which are yet to come. I think we are onto something good here. And please, in case that you have any questions or comments, or there's a real life case which happened to you when you just don't really understand what's going on in regards to payments and banking, let us know, because that could be a good opportunity to discuss it the next episode and reveal a lot of information about how money moves and how banks think. So please share this with us, and let us discuss this in the live episodes.
Exactly. And if you want more information on Victoria's book, you can go to movingmoneybook.com, or if you want to book Victoria for a speaking engagement, you can go there. And if you want to learn more about us at Merchant Advisory Services, or you want to get in contact with me, you could just visit merchantadvisoryservices.com or click the link in our bio. You can follow us on social media. And I guess look out for more content from us. Hopefully, we're going to be doing this on a regular. What do you say, Victoria?
Definitely. Can't wait. I'm really looking forward to this.
Yeah, me too. All right. So any last words? Anything else you want to share before we go, or no?
Well, see you very soon, and we are off to something good here.
All right. Well, take care, everybody. It's good being here.
Thank you, guys. Bye.